Good morning, good afternoon, good evening. Welcome back for another video. I hope that all things considered you are doing well, that you're having a wonderful week, and that you are able to survive the massacre that we just witnessed. I'm going to be upfront. You could probably tell by looking at the time of this video, which I'm in the process of making as I'm speaking, that this is going to be a longer video, and it's in depth. I want to cover every possible scenario in my mind. And I actually want to share with you the agenda that I'm looking at on Monitor 2. I don't usually do this as far as like putting together an agenda. I just go off of what I see on the tabs, but I know this is kind of ghetto of me. But here is essentially what I want to talk about today. My last video that I made last week, I want to revisit this chart that had me, quote, extremely bullish. I want to compare Bitcoin from now to 2018 because there are some things that are comparable, and included in that is the potential of a minor capitulation, and examining the possibilities of that, because that is what really drove the price down very hard in 2018 was a minor capitulation. What kind of a threat is there for something like that to happen again? I want to look at the golden ratio, aka the 1.618 Fibonacci retracement level that I've been talking a lot about, the 200-week simple moving average, what's the potential that we're going to go down there, the threat of a Microstrategy margin call and what that could do in relation to the 200-week simple moving average. USDT fears, and I probably need to be clear, if you haven't heard me talk about the 200-week simple moving average, that has very much marked bear market bottoms. And so the question is, are we heading there or are we not? So USDT fears, the UST Luna debacle has certainly injected some kind of fear that maybe Tether would crash as well. And we'll take a look at that. We're not going to take a look in depth too much into that, but I do want to address that. I want to talk about altcoins, and I want to talk about, was $69,000 the top for this cycle? If you end up watching this entire video or most of it and you like this content, please smash up that like button, subscribe to the channel, and leave a comment in the comment section. But otherwise, let's go ahead and dive right on into it. How about we get Coin 360 off of my screen for a bit? I want to revisit this chart that had me extremely bullish, according to my last video at least. And I just want to share with you some things that I'm not as excited. Just looking at what has happened in comparison to UBS estimates, I am not nearly as excited as I was when I made that video. And we can talk about that. I'll actually show you what I've been tweeting. But here we go. UBS estimated, they gave their estimates for what CPI would be, what inflation would be, reported at least, for the month of April. Now, this was March, this 8.5%, that was March. They hit the nail on the head for that. And then for April, their estimate was 8%. And the number that came back was 8.3%. And I cannot stress this to you enough. I've talked about this a lot on my channel, but we need inflation to go down before we have any hopes of being bullish. I know that seems counterintuitive, but we need inflation to go down because of the Federal Reserve, because of their threats of hawkishness and their threats of turning things up a notch when it comes to raising interest rates, when it comes to quantitative tightening, all of those things. This is a very key piece of the puzzle. And so when I made that video, I was very much of the mindset of, if there was a CPI score of 8 like UBS estimated, that I would have thought that would have been a good time to go risk on. In other words, to get out of the dollar. The DXY is going crazy. It's pumping. The 10-year yield is going parabolic still. And to get out of this mode of fear and into, hey, the recovery is underway, we can now go risk on, because Jerome Powell, Lael Brainerd, whoever else, whatever Fed chair is speaking, Michelle Bowman, whenever they speak, it seems like they want to put it on the forefront of our minds that their primary concern is attacking inflation. And so with a score of 8.0, there's a mindset of like, okay, we know inflation is high, but hey, look, we're heading in the right direction. So let me actually read this now. My concern with 8.3 CPI has to do with the fact that I'm trying to think through the mind of a Fed chair. They could have looked at 8.0 and communicated something like, we know inflation is high, but we're heading in the right direction. Give it some time. And so, in other words, they're not going to threaten to raise rates 0.75 or even higher at the next Fed meeting in June. Now their messaging is probably not going to be much different than last month. Last month, Lael Brainerd, the most notoriously dovish Fed chair, spoke and was like, we've got to attack inflation. And then Jerome Powell spoke, same thing, and the markets responded very poorly to that. And so every time a Fed chair gives a speech between now and next CPI release, there probably isn't going to be any dovish communication. A score of 8.0, I do think, we're in the right direction. It's time to, we have applied the appropriate amount of pressure, but there's probably not any dovish communication. More of a maintaining of the status quo. That's best case scenario. And then I'm wondering if UBS's estimate, let's go back to this chart here, of 7.2 for the month of May actually needs to be revised. Maybe it needs to be revised to a higher number. 7.0, 8.0, we'll see. I'm not shorting Bitcoin where it is right now, but it would make sense to me to short any kind of relief pump, the 20-day EMA perhaps. So perhaps I would say that short-term best case scenario is that we're going up to the 20-day, exponential moving average, and we'll get rejected there. That's at $34,000, and then we'll go right back down. Maybe to the lower 30s, maybe the 20s again, and who knows? Who knows how much lower we're going to go? And I do think short term that's going to be the case. But I really, for me to say that that's best case scenario, a mini pump to $34,000, that's not too exciting. So this chart that had me extremely bullish this particular month, the CPI report, I am not excited about that. And I'm a little nervous, just a tiny bit nervous. I do think that that 8.5 was the peak, but I'm a little bit nervous that perhaps next month we're just going to stay right in the 8s. Maybe we'll just go right back up to 8.5 and 8.5 will not have been the peak, and maybe we'll go higher after that. There is a fear about that, and the Fed's going to have to respond. And at some point, yes, the pressure of the economy collapsing is going to outweigh the pressure of inflation, but we're nowhere near that now. The Fed's looking at the Dow over $30,000 and like, no, inflation is much more scary and much more important of a thing for us to attack. And so this next month, I am not bullish at all. I'm not even a little bit bullish. I'm sorry, not a little bit. Am I bearish? I mean, Bitcoin under $30,000, I'm not selling a dime, but the upside is limited. I think there's more downside. We'll see about next month, the next CPI report. So no, I'm not extremely bullish anymore. But hey, let's compare now to 2018. There are some things that are important to look at for now in comparison to 2018. Is this the capitulation? Are we in the middle of the capitulation? Have we capitulated? Those are all questions that we need to ask. One thing that I'm going to say that I will stand by on very firmly is that there is a little bit of debate as to what was the peak. What was the peak of this cycle? This right here, the four-headed monster where we got up to $64,900, or this two-headed thing where we got up to $69,000. In my opinion, and I hold this very tightly, I think it's a no-brainer. The 64,000, this first run was the peak. That was the peak of the cycle. Dollar amount, yes, $69,000 is a higher price. We reached $69,000 in bear market conditions, and we have been in a bear market since April of 2021. And the key indicator that is making me believe this is take a look at the volume. Look at how much greater the volume is in early 2021 in comparison to late 2021. We had a low volume spike up to $69,000 and dumped really hard from there but then the volume was very high up until those last few weeks of that first peak. And so, unfortunately, yeah, well, no, this is a good thing, because if this was the peak of the cycle, $69,000, then when is the bottom for Bitcoin? I would say maybe, we still have another 6, 7, 8 months until we reach the bottom. But if this was the peak, which I'm arguing very strongly that it is, we are pretty much at the point timing wise where we should be bottoming out. Does that mean that Bitcoin has bottomed out in price? No, we can certainly go lower. But the worst part is either coming soon, or is close, or is a week away, or 2 weeks away, or maybe a month away. But the worst is going to soon be behind us, no matter what that may be. And so in comparison to 2017, 2018, so Bitcoin peaked, right? Bitcoin peaked in December of 2017, around $20,000. And then it took about a year, pretty much exactly 1 year, for Bitcoin to reach its bear market bottom, December 10th, the week of December 10th, 2018. And here we are, we're 13 months, almost exactly 13 months from the true peak of the cycle, and we are seeing similar bottoming out patterns. We are at the lowest price since January 1st of 2021. And Bitcoin is lower now than it was on January 1st, 2021. And before that, it's right there. It's a little bit higher than it was on December 31st, 2021. So 13 months, and here we are. We are very close to a bottom, but here's the thing that I want to point out. When did that capitulation happen? What did that look like? I mean, this was 2-3 months of just absolute torture. It was miserable. It was ranging between $6,000 and $7,000, and then it just pretty much flatlined until we broke that $6,000 support. And then here's the thing. A lot of the times when we look at this chart, it's really easy to think that, oh man, yeah, it just dumped right away. But no, this was 5 weeks of torment before Bitcoin bottomed out. It was about a month. It took about 1 month broke the $5,000, the $6,000 support, went down to the fives, went down to the fours, the threes, bottomed out 5 weeks after breaking through that $6,000 support. And so what do we compare this to? That's a difficult question, and it's not necessarily something that we need to expect it to be 5 weeks between, let me say, this candle right here, last week's candle, and let's say this is week 2. I'm not necessarily saying it's going to take us another 3 weeks to reach a bottom, and maybe that bottom would be the 200-week simple moving average, which typically marks out a bear market bottom. But it could be something similar. It could be something similar where we are very close, a few weeks out. We have about 3 more weeks of pain before a true bottom. And what does that look like price-wise? I mean, there's a lot of possibilities. Maybe this is it, because I mean, look at that. We're on week 7. We are 7 weeks in a row of decreases in price. And this is, this might be a first historically. I'm realizing that I don't know the information here. I think we have had 6 straight red weeks, but this is week 7. This is the 7th week in a row of red, assuming that we close red this week. That is an extreme rarity in Bitcoin's history. So, hey, maybe this is week 7 of that capitulation and we're about done. We'll see. It does seem like there's a lot of interest in moving down to the 200-week simple moving average. So let me adjust one thing really quick. I'm going to talk about the golden ratio, aka the 1.618 Fibonacci retracement level. You guys know that I have been a very firm believer in this, and we held that very strong. We held that very well over the summer. This 1.618 Fibonacci retracement level, where we had 3 wicks below that level, but we're able to hold it every time. In my opinion, if I'm going to be honest with you, it does seem less likely that we're going to hold it this time. I wish that that wasn't the case, but this will be, in my opinion, the first time that we have had a weekly close. So we do have a few more days, but a weekly close below the 1.618 Fibonacci retracement level. That's really sad to me, but at the same time, we are economically in a position that we have also never been in Bitcoin's history. This is, Bitcoin has had its bull markets and bear markets, but economically, the United States at least has not had anything close to a recession since the day that Bitcoin was founded, January 3rd, 2009. I mean, we were in a recession when Bitcoin was created. We got out of that recession, and it's been all rainbows and butterflies since then. So yeah, we're in a recession now. Okay, there's a reason why we might have a weekly close below this golden ratio. But how far can we go? There are a few things that I want to examine. And first of all, is this potential of a minor capitulation? So this happened. We don't have this on the chart. Don't really pay attention to this. This wasn't necessarily a minor capitulation. This right here in January of 2021 was a single miner selling all of their Bitcoin for some crazy reason. And so that was a unique event. But ever since then, since what was that, about February of 2021, we have seen in general miners accumulate Bitcoin. Now we do have a little bit of a drop off here, but it's not that for sure is not a capitulation in the middle of this capitulative event. And so what is this, and will it get worse? Well, think about miners in 2018. Were miners small fish in 2018? No. In 2013, miners were pretty small. It was a guy in a garage with a miner, hooked up to his computer. In 2017, there were warehouses and factories that had mining equipment, and that was pretty much the biggest fish, especially in China, the biggest fish in the sea. And so a lot of those miners sold and capitulated and caused the price of Bitcoin to go down from $6,000 to $3,000. And the difference between, okay, sorry, my wife texted me. The difference between now and 2018 is quite simply that miners are much bigger than they were in 2018. So now there are a lot of the biggest miners are publicly traded companies. You got Marathon, you've got Riot Blockchain. There's several others that I'm blanking on right now. And what their behavior over the last year at least has been to not sell any of their Bitcoin in order to pay the bills and to pay salaries. They have been borrowing money but not selling their Bitcoin. And so will that remain the case? In my opinion, it is much more likely that we're not going to see a capitulation here, but more of a maintaining of the status quo with that, where the big time miners will probably not sell much of their Bitcoin. But then, Eddie, Joe, Bob with an ASIC miner in his garage. I don't know what I'm saying here, but some random guy with an ASIC miner in his garage, he's probably going to sell some of his Bitcoin, but just not the major players. And this is what I'm seeing here. So I don't think that in particular is going to contribute to a revisiting of the 200-week simple moving average. There are other things. I mean, I just think that there's a lot of momentum now for the potential to reach the 200-week simple moving average. So taking a look at that, I mean, we're not too far off of that. Price is 28,000-ish, 29,000. The 200-week simple moving average is $21,000. And so that's a 25% drop. I mean, usually in cryptocurrencies, we call 25% drops Tuesday or something like that. So could we get there? Could we get there soon? Yeah. And I mean, if we're playing things out like we did in 2018, and let's say we have another 3 weeks or so of downward momentum, especially with all this Fed news and the CPI report that I mentioned, there's a potential over the next 3 weeks to get there. Now, how far down can we go, and where do you set your limit orders? If we do, I'm not saying that we are definitely going down there. I would say that it seems more likely than not that the movement is down, and we could go down and still not touch the 200-week simple moving average. But I think it's more likely than not that the movement from here is down more than up over the short term. So how far down can we go? Well, there is another thing that I do want to bring to your attention. I mean, first of all, please understand that we have wicked below the 200-week simple moving average several times over the last, in 2015. I mean, man, again, several weeks here. This is a period of what? Something like 6 months. Oh, that's more than that. Wow. Yeah, that's almost the entire year of 2015 where we were hanging around the 200-week simple moving average. There was a point where we wicked about 30% below the 200-week simple moving average. So, I mean, will that happen again this time? Not necessarily, but that would put us at about $15,000 for Bitcoin. I don't think that's likely. I think that's very unlikely. One thing that I'm keeping my eyes on. So, but if we do move down to the 200-week simple moving average sometime soon, then what's going to happen is you don't set your limit order for $21,770. What you do, in my opinion, is set it like, somewhere between $20,000 and $21,000. And if we get down to that moving average, it will get filled. We'll probably have an initial bounce off of that because of people setting limit orders right at that level. But if we get down there, I would very much expect a wick below. But something really fascinating about that particular level is that that's also the level where there are fears that Microstrategy would be margin called and would have to sell all of their Bitcoin. If you're not familiar with Microstrategy, they are a publicly traded company and they own they've converted fully to the Bitcoin standard, and they own more than how much is it? More than 116,000, something like that, Bitcoin. They have that much Bitcoin in their possession. And so what kind of selling pressure would that bring on the market if that happens? Now, Michael Saylor is claiming, Michael Saylor, the CEO of Microstrategy, is claiming that there's no fears. There's plenty of bullets in the chamber. They don't need to be margin called. They don't need to sell any of their Bitcoin if it gets down to about $21,000. Now, should we believe that or not? I mean, I don't know. That's if I was Michael Saylor, or what I would expect from Michael Saylor to say, whether he believes this to be true or not, is that there aren't any fears. But we'll see. We'll see if we get to that point. And if so, maybe that's the kind of catalyst that would send Bitcoin down to $15,000. Might as well set some kind of a limit order there, I suppose. But I don't think, I tend to believe that we're not going to see some kind of massive sell pressure because of Microstrategy needing to liquidate their Bitcoin. We'll see, but it's something on the radar. Again, yeah, you want to set a limit order at $15,000, go ahead. I very much do not believe we're going to $15,000. Another thing that I want to pay attention to, and I'm just now realizing that I don't have this pulled up here, so bear with me for a second, is USDT. So this is another thing that I think is going to be handled. And I'm going off of the opinions of a lot of people who are much smarter than I am. I have been researching this. I woke up in the middle of the night to a notification on my phone from another person who's like, get out of USDT. And so middle of the night, that's around the time when I have very irrational thoughts. And so I have a rule, and I would recommend you do the same thing. If you wake up in the middle of the night, do not sell or buy anything crypto or investment related. That is my rule. You do what you can, but I tend to have very irrational thoughts in the middle of the night. And so I saw that and I went into panic mode, and I posted something on Twitter, but then I removed it. And is Tether collapsing a legitimate fear? The UST thing, the Luna stablecoin fears definitely fed into Tether, and Tether got as low as I think 94 cents, 94.85 cents over the last 24 hours. Is this a legitimate fear? I will just go based off of the research that I've seen. Tether is not UST. Now, are there concerns about Tether? Could they crash the market pretty heavily? There are concerns, but they are showing a level of resilience that I don't think it's not a red flag right now. I wouldn't even say it's a yellow flag. It's something to keep on your radar. Check out the Tether price. If you see it go back down, that would be my big thing. If we were to see it go back down below 94 cents. There may be some issues that could very much drive the market down. Let me even compare the two. So Tether is much bigger than UST. Tether has a market cap of $81 billion, a little more than $81 billion. UST, on the other hand, which certainly played a role in bringing the market down to where it is today, currently has a market cap of $11 billion. When it was at $1, it had a market cap of, I'm just doing basic math here, around $30 billion. So 30 billion in comparison to 81 billion. Yeah, that could do some things to cause the markets to suffer even more if Tether collapsed. Now, USD coin, I was wondering about them, and BUSD, those things look rock solid. I think the biggest concern is Tether, based off of a lot of fears of that have been brought up. You know, Letitia James, the attorney general in New York, sued Tether, and Tether settled out of court. And so be it. As of right now, this is on my radar, but I wouldn't even label it a yellow flag. Now, the last couple of things that I want to talk about is I want to talk about Bitcoin versus altcoins. You guys may think I'm crazy. I don't care. I do not believe that $69,000 was the top for this cycle for Bitcoin. I don't believe that. I believe that the bull run got cut short, and that the $69,000 peak, what I think would have happened, I know that we had a low volume move up to $69,000, but what I think would have happened is that the volume would have increased if we sustained any period of time above the previous all-time high from April 14th of 2021 at a little under $65,000. If we were able to hold that, I do believe that there would have been some volume and some excitement that would have driven the market higher. And so, do I believe that $69,000 was the top? I don't. I don't think, honestly, I don't think we're going to go much higher than that, but I do think we are going to go higher, maybe up to six figures. We'll see. And if I'm wrong about that, really, here's another thing that I was thinking of. I could honestly see it being within days or maybe a few weeks of the next halving, which is less than 2 years away. If we need psychologically just to get to the next halving, I think it's going to be very quick after the next halving that we cross through $69,000. But there are still plenty of things potential wise, and considering that $69,000 was not the top that would have been under normal circumstances, I am sticking with that. Now, the reason why I want to mention this in comparison to altcoins, though, because does that mean that you go out and buy all your altcoins at these low prices? That doesn't necessarily mean that. And here's what I want to compare it to again is 2018. So 2018, again, we bottomed out at $3,000. We at least wicked to that point. I don't think we ever breached $3,000, but we got to the low $3,000 range. And then we spent several weeks, and that's actually something that I forgot to compare this to. So 2018, how many weeks did we spend after we got to $3,000 in this miserable range? This is, let's see, I'm going to count it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks before Bitcoin broke out. Rode the 200-week simple moving average, got resistance at the 200-week EMA, broke out the bull market support band, went all the way down to the 200-week simple moving average and the 200-week EMA, and it was at that time that we broke through. I wouldn't be surprised. Let's say $28,000, we got to the $25,000 range, or wherever we bottom out. I wouldn't be surprised if we spent something like 15 weeks at that bottom before moving higher. And maybe it's the same thing. We ride the 200-week simple moving average. We get rejected at the 200-week EMA. The bull market support band comes down. We range in there for a week, and then we break through, and then we're off. That could take another 4 months. I expect you know what? I'm just going to say this. I don't think we're hitting $40,000 even in the next 3 months or so. Yeah, I don't think so. I hope I'm wrong. But what happened when we broke through? I mean, this is the exciting part. And so I don't want to be all miserable. But what happened? We broke through. Over the next 3 months, we rallied to $14,000 from 3,000. More than triple your money, quadruple, maybe even. And so I wonder. I think something similar could happen this time around, where we see this next rally, and perhaps because we didn't have a blow off top, perhaps this peak will be higher than the peak in November. That's what I'm wondering. But here's the thing I want to say about altcoins in relation to this. Here's Bitcoin's chart, bottomed out, and then spent 4 months or so in that miserable range before climbing. But let's take a look at something like Cardano. Cardano at the same time bottomed out, let's say December 30th at 4 cents. And then July, when Bitcoin was, late June, Bitcoin was at $14,000. Cardano was at 9 cents. Okay, so it did less than a 2x, but then went right back down. Even if Bitcoin reaches a new all-time high, I really believe that a lot of these altcoins aren't going to do anything, like anything. And so what do you want to do? Let's just, if you come to that same conclusion, what do you want to do? And I actually brought up Dogecoin as well. Dogecoin, you can't really see it. It peaked at 1.7 cents in January of 2018. And then again, Dogecoin just the same way. It flatlined and it was completely unaffected. It didn't do anything at all when Bitcoin rallied from $3,000 to $14,000. So what do you do with your altcoins? I mean, man, I'm sorry. You guys know that I've been very much in favor of being largely in Bitcoin and Ethereum, and that in comparison to other so-called influencers, that I emphasize that much more than they did. But when I break it down, honestly, I was influenced by the other influencers, and I regret that. Like, if I could do it again, I would have just said, buy Bitcoin, buy Ethereum. And for the bear market, at some point, I'm going to say again, load up on Litecoin. I very much believe that Litecoin is going to have a breakout at some point, but it's probably not till the next halving, So the time to load up on altcoins is when it's right around maybe a little bit before the next halving, maybe late 2023. And I talk about that in my bear market buying guide. Maybe late 2023. I'm not touching anything for a year and a half in regards to altcoins. And should you sell, I mean, the upside is very limited with your altcoins. The downside, there's plenty more downside. And so this is not financial advice. Please do your own research, come to your own conclusions. I'm pretty much entirely in stablecoins, Bitcoin, Ethereum, and not Maker. I have a little bit of Maker, and that'll be fine. But Binance, I think Binance actually correlates pretty well with Bitcoin and Ethereum as well, and it's not down it's down about as much as Bitcoin and Ethereum are down. So I'm fine holding and staking my Binance coin until the next cycle at least. So other than that, I mean, when I had to sell my crypto to put a down payment on my house, I sold my altcoins first, and that was the right call. And so if you decide to sell your altcoins, here's when I would do it. I'm going to actually have to, that's the 2018 chart. I'm going to have to do a daily chart here and then clean it up real quick. Man, I think we're going to get rejected. At some point we're going to get up to this 20-day EMA. Right now that's at $35,000. I think maybe we'll see. Maybe it'll get down to $34,000, $33,000. We'll get rejected there. If you decide to sell your alts, I think that would be around the time to do it. But I am expecting nothing significant for altcoins. All right, XRP, SEC suit ends, which it seems like it's never going to. Then, yeah, maybe XRP, hold on to that. Well, actually, yeah, I haven't sold any of my XRP. No, no, that's not true. I sold a little bit of it, but I'm perfectly fine holding my XRP because I'm eager to see what happens after that lawsuit. But I missed out on the peak. XRP is not going back up to $2 this cycle. So, sorry to be bleak. There is a light at the end of this tunnel. If it's just to sum up, if it's like 2018, we have another few weeks of downward price action, and then we have another few months of sideways action, and then maybe we'll see the bull market support band go down. We'll get on top of it. We'll hold it. We'll ride it up. But otherwise, man, short term, crabbish bearish, medium term crabbish, long term, super insanely, unbelievably 100% bullish on Bitcoin and on Ethereum. Some of your altcoins will never recover. So, lesson learned. Buy altcoins early, sell them early. All right. Well, I've been going on for a while. I hope you have a wonderful rest of your week and a good weekend. And love to hear your thoughts in the comment section. I will see you in another video. Peace.